Hello guys, welcome to FX Rescue Family. Today guys we'll be talking about the fundamentals. So so right now we are on investing.com. We are on investing.com. So here we have the previous data from the previous news release. It was 1.1 and it was a buy. As you can see, it is green. So here is the prediction for the upcoming news. This is the prediction for the upcoming news. So now this is the actual. This is the actual. The actual, it means that when this is what happened to the previous news. When the previous news was released, this is what happened. So normally actual is supposed to be empty. If you can check it, suppose let's assume that the actual is empty. This is what happens after the news is released. Actual is the present moment. Yeah, I think it's much clearer that way. Actual is the present moment. So for now, let's assume it's empty now. This news is going to happen the next week, and here it's empty. So what most of you guys do, if the news are going to be released on Monday and it's Sunday, you already assume that it's going to be a buy because now the forecast is bigger than the previous. You understand? Of which it is not always the case. It is not always the case. So I think before it used to be we did have before there was that little accuracy before, but in most cases this does not work, guys. This does not work. So you cannot rely on the forecast for the upcoming news because this is just a prediction. This prediction is not always accurate. This prediction is not always accurate. So what must happen? You wait. Let's say the news are coming out at 2:30. 2:30. So instead of placing your trade at this time, sorry about my drawing. Instead of placing your trade at this time, you wait until the news are released, and then you come on this site. You check whether it is a buy or a sell. When it is a sell, it will be red, and this number here, this number will be smaller than this number. As you can see now, is 25.5. It will say 25.5. It will be red, and then you sell. If it is greater than this one, let's say it says 5.2. When it says 5.2, obviously it's greater. 5.2 is greater than 4.2. You do what? You buy. You understand? So it means you'll enter your trade at something like 2:31. So normally when the news are released, if the candle is too volatile, if the market is too volatile, let's say this is on the consultation area. Once the news are released, you'll see there will be a volatile candle shooting up or either down. So there will be a breathing. Meanwhile, you are checking whether it's positive or negative. It will be a breathing, a little pullback towards the downside. Meanwhile, you are checking, and then you get your chance to enter. If you don't get your chance to enter, bad luck. Don't force, because now this is just gamble unless you are sure about your candle patterns. If you are sure about the candle patterns, sometimes it will be like this. It will be like this somewhere around here. Here you have a W, and it's on. It's on a support level. It's on a support level, and the market was retracing let's say the market was retracing, now it's on a support level, so your analysis are telling you that is going to be a buy. Beside depending on this forecast, your analysis are telling you it's going to be a buy when the news are open. You can do that. You can enter at this time. Now you can enter at this time because now you are sure about your prediction. Right? You are now sure about your prediction. And then now it will be your prediction plus the forecast. Don't solely depend on the forecast. It will be your prediction plus the forecast, and now we are sure that entering at 229 1 minute before will work for you. But if you don't know how to analyze the market, you're only depending on the forecast, you'll always lose your money. You use the forecast if you know how to analyze the market. If you don't know how to analyze the market, this is where you're going to enter. You're going to enter here because when it says 230, you are opening your investing.com is still loading. The moment it might take a minute, then you'll be able to enter the market. You follow through with it. But now, here's the other thing. Sometimes you'll find that some news, the actual becomes white, like this is 4.2. The forecast, the actual does not change. Let's say the actual becomes 4.2 as well, and this arrow points towards that direction. You will see an arrow like this pointing towards that direction, a white arrow. These numbers are white, that is neutral. We are saying the news are now neutral. So we are saying the news are neutral. So meaning you stay away from the market. You stay away. You don't enter either a sell or a buy. You stay away. You don't enter either a buy or a sell. You stay away. That is neutral. Let me repeat myself. As you can see, the forecast is written in white numbers. Yeah? Now, the actual, when you open your app, you want to check whether the news are positive or negative, and you find that the actual is written in white, and there's a white arrow pointing towards that direction. You stay away. So now, here's the thing: you enter with pending orders. You enter with pending orders. Let me erase this. I want to show you something. You enter with pending orders. It's like this. Let's say it's like this. You put your pending order here. Huh? The moment you say, let's say most of you are doing putting your pending orders at 100 points. The moment it says half past, let's say the moment it says half past, you'll see something like this. The candle will. No. What did I do? Let me do it again. Let's say like this. Pending order. Half past 2. Market does like this. So you see what's happening. Your sell here, your sell stop is triggered. Your buy stop is triggered. You didn't get a chance whether to close one position and stick to the other. Your account is now in a mess now. The account is in a mess. So normally this happens when you are trading. Let's say you are trading the session, the half past 2 session. Let's say it's a half past 2 session. News event, and at half past 2 we have let's say you have USD event, and you have GBP. Just example, GBP event. So it's GBP event and USD. So the market is going to accommodate these two pairs. So now the USD is positive. No? the GBP is negative. What will happen when that time arrives? You will see something like this. It will first spike down and then go up. That is what will happen. USD is stronger than GBP. That is what will happen. So both your orders are triggered. So normally what I do in most cases, that is the reason I don't trade too many pairs. So if it is 2:30, I want to see one event at a time. I want to see one event at a time. Or else, if the event is not that, the second event is not that important event. Let's say it's jobless claim versus CPI. You cannot compare the two. It will just be a little spike and then up, and then that is when you enter. Do you understand? So, but you must have experience to it. But if you are not experienced in terms of trading fundamentals, I suggest to stick to one event. You look at events that like there's a USD GDP. USD GDP it goes solo. It does not have other events that goes along with it. It goes solo. You trade events like that until you have that experience and so grow your account meanwhile. So I don't know if I'm clear, but if there is something you don't understand, you can always leave your comment in the comment section, and then I'll attend to it. So we talked. So a little recap, just a little recap what we talked about when we started our session. We said this forecast is not always accurate. So when you trade the forecast, you must be able to analyze the market when you're going to rely on this. And then we also talk about the actual, that if you don't know how to analyze the market, the best way is to wait until the market are released so that you can see what your actual is. And then if your actual says negative, when it is red, you sell. When it is green, you buy. When it is white, you stay away. You stay away from the market when it is white. So the other thing, if you enter at let's say it's 225, sometimes you enter at 229. Some of the events you enter them like this, only to find out that the market is going to be neutral and both your orders is going to be neutral. So the risk is that the market might be doing some just like this, tricking your orders, playing around, messing with your account. So it's also not safer to trade to enter the news a minute before. So it was before the lockdown, market was moving differently by then, but now things have changed. Some of the strategies don't work anymore. So now we have to change with the market. We also have to change with the market. So now some of the events, but there is some of the events that you can trade 1 minute before. You must just know. So in our group, what we do, each and every news release, we have a strategy for it. We have those news release that we trade 1 minute before. We have those that we trade let's say 2:30, a minute after. So we also look at the history of the news event. We look at the history of the news event and then we trade it according to the history. That is what we do. So I don't know if you will find if you find this helpful, please click the like button. You find this helpful. If there's something you don't understand, like I've said, I'll come back. Just leave your comment and then I'll come back and explain it to you. So this is how I see the market. So I think I have covered everything I wanted to talk about. So this will be the end of the video, guys. Thank you. See you with the next video.